Looking good, Billy Ray. Feeling good, Lewis. Unfortunately, you'll never believe it, but this is not Tom O'Brien. This is Larry Pesavento setting in for the master himself. This is like trying to follow Johnny Carson, boys and girls. So I'm going to do my best. We're going to have Norm Winsky on at the break here in about a half an hour. We don't get to hear him on Chom's show very often, but he's very, very good. And also, I want to mention for the last 2 days, remember we had Shane Smolian on from wolftrader.net on Tuesday, giving us actually he came, excuse me, let's make that a correction. He came in on Tuesday and he gave us the highs and lows for both Wednesday and Thursday, folks. It was really amazing what he did. He said that at 10:30, that is when the Fed acts, we made our low on Wednesday at 10:30. We made our high today at 10:15. So these numbers you certainly should watch. That's 1 hour after the opening, but they've been spot on. And this is really good information. We're fortunate to have guests like we have, which give us a great deal of information. Now, the chart that I've had an email request from one of Tom's listeners is the chart of Deutsche Bank. I've posted it in here going back over the past several years. As you can see, it's been in an extended downtrend. It's making new lows every day. We just had a rally up to $18 a share, and now we're testing $12 a share in just a matter, down 33% in just a matter of a few days here. This stock looks like it's heading for Lehman Brothers territory, boys and girls. When it was at $22 a share, it certainly looked like the Lehman Brothers chart from 2008. Remember that Deutsche Bank is the largest bank in Europe. It's the benchmark of the German banking system. They are not going to let that bank go to zero. I shouldn't say that, but I would not think, given the pride that the German people have, they will do something to bail that bank out. Because I've heard this phrase before, too big to fail, and it'll probably be the same over there. But the price objective on this ABCT pattern is minus $3 a share, and we're trading at 12 right now. And I can remember Jim Cramer's show back in 2008, because I had a friend that was involved in Lehman Brothers that was afraid of what was going to happen, and it did. Fortunately, he was able to pick up some puts and salvage about 25% of his retirement, even though the rest of the firm went under. Let's get back to the Deutsche Bank. We don't know what's going to happen, but the prices do look like they're going to go lower. Now, we've had a request for soybeans from our good friend Danny in Atlanta. And Danny, the soybean market is beginning to look like the silver market that we had on the 4th and 5th of July this past week. We've had tremendous amounts of volatility here, and just recently, in the last 3 or 4 hours, we have broken down badly in beans, breaking below the 78% retracement. Now we're very close to making the long-term ABCD pattern in corn. I'll use that as a reference here, because we start talking about that on Monday, and all you have to do is interpolate, because all these grains, wheat, corn, and beans, are in the same type of scenario, except for soybeans are still rather bullish. They're just making a 78% retracement of the low from early May. But the others are making new lows like we're seeing in corn, and we also saw that in wheat, where we made a beautiful 1.618 expansion in the wheat, and it came down and rallied almost 28 cents. Fortunately, we were able to catch some of that, which was nice. But it settled here at 425, which is nothing more than a 61% retracement of the day's range from yesterday. But we'll find out what's going on. It's my personal opinion here that the key to these grain markets lies in the corn market, because corn is the largest crop that we have in the United States by far. And I think that if corn can bottom here at around this 3.43 a bushel, we came within 3 cents of that just yesterday, and it looks like we're heading down to make another new low today. So around that 3.40 level, the 3.43 level in corn is what we'd want to be watching. And remember, we're over this really strong cycle stuff that should give some really good volatility, which we're already seeing. Folks, if you would have told me Sunday night when silver hit 2140 that it would be down on the week, I would say, you better find out what you're smoking and sell at retail, because no one would have thought that. And here we've dropped $2 a barrel, an ounce here in the last few days, and now we are trading at levels that are below where we were when we closed on Friday. But it's still early. We're having some really big volatility, and that's the $64 question of what we're looking for. But the soybeans did break down below the major support level that we had at 1340, and that's primarily what we're looking at as we walk through here. There's been virtually nothing happening in the Nasdaq. It acted beautifully all day long. It went to negative territory with about an hour to go, and then of course it came back and rallied strongly with the rest of the market. So the Nasdaq still looks pretty good. The S&P, all it did was go back and test the old highs up at that 2103 level before dropping 20 points. So not too much at that point. Starting Thursday of each week, I start to prepare what I think is going to be the key levels to talk about, in the newsletter that I do each week for my subscribers, because I try to give them an idea of some of the major things that are occurring. And of course, we're going to be looking, at the gold market and also the silver market, these tremendous moves that we've had. And in particular, I'm always a big fan of the 1.618 expansion levels. And if you'll take a look here at the level of the the Dow. I'm not used to working this late in the day. It's the level of the gold at 1377. That was our high, which was a 1.618 expansion that also completed the ABCD. I'm not sure if Basil's supposed to come in and work with Tom during this show or not. But Basil, if you're around, come on in and talk, pal, because I could use it. You're the master. And I really would like to hear from you. So I don't know if you're going to call in or not. I will have Norm on for a few minutes here a little bit later, but I do hope you'll come in and give us a short segment whenever you get a chance, because you're the reason why CNBC you're the reason why TFNN is so popular, is because he is so very good. The other guys are good too. You just listen to Andy; he was terrific. Dave is terrific. Steve Rhodes is terrific. I mean, John Logan. It's really good. It's really good to be around these things. But anyway, we'll cover some of this stuff here, and we'll get back to this a little bit. I don't sleep, Andy.